The truth about breakouts, why most traders fail, and how to understand them better. Breakouts look simple. A price moves above resistance, and traders expect a clean rally. But here's the truth, almost 60–70% of retail breakout trades fail, not because the market is wrong, but because traders misunderstand what a breakout actually is. This one concept, when understood properly, can radically change how traders read momentum, wait for confirmation, and avoid fake moves. Today, we decode it the right way. Every trader has faced this situation. You see Nifty consolidating near a zone. A candle finally breaks out. You get excited. You enter immediately. Within minutes, the market reverses sharply, hits your stop loss, and closes back into the range. You stare at the screen thinking, why does every breakout I take fail, but the one I skip goes perfectly? The pain is real. The good news? Breakouts are not random. They follow repeatable structures, and once you understand them visually and emotionally, your decision-making improves significantly. To understand breakouts, visualize 3 zones. A. The build-up zone. Price compresses. Candles get smaller. Wicks reduce. Volumes tighten. This is the energy loading phase. Most traders ignore this, but institutions track it heavily. B. The trigger zone, breakout candle. Price spokes above resistance. But detecting whether this is real or fake requires understanding. Candle size. Wick length. Volume behavior. What the previous candles were doing. Breakout candles that come after messy, white candles tend to fail more, because no real build-up existed. C. The retest zone. Strong breakouts often come back to retest the same resistance, now support. Weak breakouts don't retest, they collapse. If traders understand these 3 stages, they stop chasing every green candle and start identifying whether a breakout has actual strength behind it. The market psychology behind breakouts. Breakouts are not just technical events, they are psychological battles. Fear of missing out, FOMO. Retail traders jump the moment price crosses a line. They enter emotionally, not structurally. Institutional trap creation. Smart money knows retail behavior. They often push price above a level to trigger long entries, then absorb liquidity by reversing the price sharply. This creates the classic bull trap. Supply and demand pressure. True breakouts happen when demand overwhelms supply. Fake breakouts occur when price moves up temporarily without real buyers, essentially just noise. The confirmation psychology. Strong breakouts have one thing in common. They don't just break the level, they sustain above it. Understanding this psychology helps traders differentiate between noise and strength. Common mistakes traders make. Mistake 1. Entering immediately after breakout. Entering on the first green candle is the fastest way to get trapped. Breakouts need structure, not excitement. Mistake 2. Ignoring candle quality. A weak candle with long wicks indicates indecision, not strength. Mistake 3. Not checking higher time frames. A breakout on 5 minutes might be meaningless if the 15 minutes or hourly structure is still bearish. Mistake 4. confusing momentum with volatility. Big candles after news events often look like breakouts but are just volatility spikes. Mistake 5. No concept of retest. Most retail traders don't wait for a retest. Professionals do. How to understand or apply it? Education, not advice. This is not trading advice, but an educational understanding framework. Understand breakout. Strength in 3 steps. Step 1. Look for compression, build up. Sideways movement. Smaller candles. Drying volume. Is equal to higher quality breakout potential. If there is no compression, probability decreases. Step 2. Study the breakout candle itself. A strong breakout candle usually has a full body, not dominated by wicks. Volume higher than the previous 3 to 5 candles. Closes above the breakout zone, not inside it. Step 3. Retest behavior. Price retests the zone and holds strength. Price crashes back into the zone weakness. Multiple time frame alignment. Always study the level on 15 minute, 1 hour, daily. If all 3 show congestion near the zone, breakout relevance increases. Understand that breakouts are not entries, they are events. A breakout is a signal of strength, not an entry trigger. What traders do at that signal is what determines outcomes. Breakouts are powerful, but most traders misunderstand them. If you focus on the build-up, the quality of the breakout candle, the retest, the psychology of smart money, multiple time frame confirmation, your ability to interpret market strength improves dramatically without giving any stock advice or predictive claims. Tomorrow, we are sharing Sunday weekly outlook. We'll connect this concept to the upcoming week's structure. How global cues, market positioning, and sector behavior influence momentum zones. Stay disciplined, stay curious, and I'll see you tomorrow for the big weekly episode.